Joining me now is Genter. He's CEO and Chief Investment Officer of RNC Genter Capital Management. Dan, it's good to see you. And do you just stay on the sidelines here?
No, Kelly, I think you have a real opportunity here actually to do some rotation, actually get out of some of the stronger names that have held up very, very well. And then there's some very distinct weakness. This is just based on the uncertainty that's here. So I think that you can, there's some real buys right now in healthcare, which is a sector that we think has been dramatically really undervalued and clearly is not going to get hurt in this, even if the conflict escalates. I think also on the financial side, some of the, again, Bob just mentioned that some of the money centers and some of the regionals are getting hit today. And that's because they feel that now the Fed may go on hold. And if interest rates don't go up, they don't have an increase in their net interest margins. And so therefore, they're getting beat up. We don't think that necessarily is going to happen. So I think there's some good buys there. I think in healthcare, financials, you've got some significantly high dividend stocks. There's probably some you do want to stay away from. The travel industry, is especially those that have European exposure, is getting hit pretty hard. There might be some domestics, frankly, that are hit a little too hard. It's not going to stop domestic travel, and that might be a buy entry. So I think that, now is the time that, I don't think you want to buy the market weakness in general necessarily because, we just have too much uncertainty. And, the market will take good news or bad news. It just won't take no news. And that's where we are right now. But I think there's some individual rotation that investors can take advantage of.
But you are expecting we're going to trade a little heavy still for the next kind of weeks or however long here, maybe 5% more downside for the market as a whole. What does it say to you when the S&P sets an intraday low, a couple months later breaches that, when the NASDAQ has a 20% correction, which we often only see when there are recessions? Some other times we can kind of shake it off. But those two sort of significant milestones, what do they mean for you?
Well, what they mean is market sentiment certainly near term has changed. I mean, we were dealing with a situation where it was a FOMO, fear of missing out. And now we're definitely going to a full buy, if you will, which is fear of being in. So everyone's concerned, as I mentioned a few moments ago, the market will digest good news. It'll digest bad news. It just doesn't like no news. And that's where we are. No one really knows where this is going to go. They don't know what the outcome is going to be. I think that what we can look at is, again, looking at the fundamentals in the U.S., which clearly have not changed, looking at companies that might have some near-term detriment, and then looking at those that are going to benefit. Look, this is going to be a clear long-term benefit for energy, for example, just because it's going to be a refocus on being energy efficient, being energy independent. Frankly, we're going to add about 1 million barrels a day in the next year, and we're going to be, the major exporter probably in the world. So there's companies that are going to benefit, and I think you can't get caught up in the very short term, even though the market's going to have pressure. And frankly, one of your guests, Art Cashin, who's one of my favorites, I think mentioned it very good this morning. He said he had advice 60 years ago that someone told him, hey, kid, don't bet on the end of the world. It only happens once, and the odds are way against you. And I think that's what people have to look at right now, is just keep a cool head and look for opportunity.
Fair enough, although I also like the way you put it, that you say wars always destroy value, often in unpredictable ways. And maybe that reference to European travel stocks is a reminder, people are right to be a little concerned heading into an environment like this, especially, I don't know what analogies we're supposed to draw on. So, there is, I think, some comfort in knowing, there's going to be fallout here. It's not to say that everything's going to be, hunky-dory, just fine, own stocks and don't worry about it.
Well, that's absolutely right. I think people need to be cautious, and which is why I mentioned earlier, I think you just don't, jump into the water head first, but I think you can stick some toes in. And when you start to really look at things of where we're likely to be 3 years from now, there are some attractive entry points, knowing that there's just no way in the world we're going to predict the next 3 weeks, even next 3 months. We're certainly not going to predict the next 3 minutes. So people have to be cautious. And I think if you have extended your risk trade, you need to take some of that off the table and go to some things that are going to carry you through this, maybe higher dividends, stronger earnings, ones that are clearly not going to be affected long term.